So today I'm doing a little bit of an update for you guys on my new potential buy-to-let property or my next investment property. I mentioned this a few months ago to you guys, and a lot of you were really interested in it and said, going forward, can I do more investment property videos for you guys? Obviously, we're mostly focused on stock market, news, finance over the last few years, but a lot of you guys were really interested in it, and I said, okay, if I've got an update for you guys, I'll give it to you. And today I've got an update for you guys. But I'm not going to lie, it's bad news, so prepare yourself. But yeah, I apologise because, well, not that you guys care, but I've already recorded this video twice, and my microphone's not working. I think I've found out that the lead is faulty, so I need to get a new microphone, so hopefully this one works. But I've already talked for about 40 minutes, so I'm praying this one is the one that works anyway. And yeah, we're back on the whiteboard. Not used the whiteboard for a little bit. I even drew you a little bit of a picture on the whiteboard. Yeah, look at that. Great artwork skills. I remember when I was back at high school, and I actually really liked art when I was back at high school, and it was on about GCSE choices, and I went to go see my art teacher at the time, and I said, look, I'm really considering taking GCSE art. What do you think? And she paused, she looked at me, and she went, I think there's better things for you to take than GCSE art. And I look back now and I can kind of see why she said that. But yeah, anyway, let's get on to this today. New buy-to-let property, new investment property. What are my current thoughts on the new potential property? So in case you don't know, yeah, I've covered obviously mostly finance news, stock market, and my investments in the stock market. But today, the property news, and I do have properties already, as I think most of you guys are aware. The last property I bought from making a lot of money in Tesla. So I bought Tesla stock back in 2018, 2019, and the stock went on to return 10x, and I made a lot of money from it. The last few years in the stock market have been absolutely amazing. Hopefully they have been for you. Well, for a lot of you guys, I know they've been amazing. Certainly my biggest investment in the stock market, Hims and Hers, has been absolutely amazing. Obviously the last few days we've been selling that stock out for a 10x return, which has been amazing. And I've got a lot of money on the side, and I thought, you know what, I'm going to maybe add another property investment into it. It's been a while since I have bought one, and the last one I bought has done absolutely amazing. I think I bought it for 112k. It needed a bit of work, but I've done the work, and a new tenant's in it now. I think the property is now valued at 230k, which is a nice bit of profit made on that one. And the tenant that I've got in at the moment has been in for 3 or 4 years. They've been absolutely amazing. They've caused me no issues. They're actually such a lovely person, and yeah, I want them to stay in as long as they want to, really. And I've even not really put the rent up because I want them to stay in. I think like I've put the rent up once since they've been in for like the last 3 or 4 years, and yeah, I want them to stay, and that's, even though the rents have gone absolutely crazy, I don't want to put it up any more than that because I want them to stay in. They're such a nice person. But I thought now's the time to maybe look at a new buy-to-let investment property. I think I told you guys I think it was August, September time, like I'm thinking about March time, buying a new buy-to-let property. And this is the kind of the update from where I'm at right now with the buy-to-let property. Now, it's not good news. We'll get on to that in a little bit. But first of all, quite often people say, like, why buy a new investment property? Like, you're a stock market guy, you've made a lot of money from stock market. Why do you want to buy investment properties? So the thing is, I want to diverse from stocks. I want to have a little bit of a diversification portfolio. I think it's good sometimes when you got a bit of wealth that you diversify, especially in the stock market. Ultimately, one thing that always is on the back of my mind is that, obviously I've done really well in the stock market the last few years, but is there ever going to be a time where I lose my touch? Is there going to be a time where I don't make as much money in the stock market, and then I'll be happy that I've got the property investments to fall back on? Or maybe I just don't want to do the stock market anymore. There's a lot of work that goes into it. Maybe I just want to step back and just sit on the properties. The other thing is, the difference between property and stocks is that sometimes I feel like you can use debt and maybe not debt, but leverage a little bit more. So with stocks, hopefully, you're not using debt leverage to go buy investments. It's a little bit more risk there if you're using, debt and leverage. But with the property side of it, property, you can sometimes take on that little bit of debt, but you're going to get that income. If you're renting them out, you can use that rent to offset your kind of debt or your payments that you need to make. So if you get a mortgage for 300, your rent that comes in from your tenant will probably end up covering it, and probably a little bit more. So you can kind of cover it a little bit more. It's not it's not a debt where you buying your own house, or you go to spend £400 a month on a vehicle, you're buying a lease vehicle, and when you're paying that £400 a month, you're not getting an asset, you're getting a liability, you're getting this car that is depreciating in value, and you're not making anything from it. Whereas, an investment property, that property is probably going to appreciate in value, and whatever your tenant is probably going to help offset the cost that you've took on there. And you can use that, sometimes you can take that leverage, that debt that helps you create more wealth, because you're getting that asset that's going to create more money for you in the longer term. The other thing is value goes up. Obviously with stocks, you hope they go up. But the thing is that with stocks, you kind of on it a bit more. You're on it like every day, every week, looking at the news. Where with property, I gotta say, even though the last property I have has gone up a lot in value, I'm not checking every week to see what the property value is. And that's the case for stocks. You probably shouldn't do it with stocks, but I do, and I'm sure you guys do. But with property, you're not going on every week, every month to see what your property value is. And it's nice to kind of just sit back and you don't really have to worry about it that much, but it will go up in value in the longer term. And the other thing is, steady income. That's great. At the end of the month, you're going to get paid that rental income. Well, hopefully, as long as you've got a good tenant. But with stocks, I'm buying some of these stocks, whether it be Gaming Realms, JD Sports, Card Factory. And when I'm buying these stocks, I don't know if I'm going to make, obviously I'm aiming to make money, but I don't know if I'm going to make that money in 2 years' time, 3 years' time, 4 years' time, 5 years' time. I think I will do, but I don't know when it's going to come in. I don't know if it's going to be 2027, 2030, 2032. I don't know when I'm going to make the money on those investments. With a rental property, I know that rent is coming in at the end of the month. And sometimes having that steady income is amazing, especially when I went through the 2022 stock market crash. I knew that I had that income coming in, and it would allow me to go buy the stocks. And that's what I really needed during that time frame. When the stock market was crashing in 2022, having that income coming every month and knowing it's coming in every month was great, because then I could go buy more assets. Whereas the stock market, when things are going a little bit wrong, when the market's going a little bit down, you don't have that. You don't have those stocks, because it's probably all went down by then, to go buy any more stocks. It's too late for that. So that's also something that's really nice to have. Now, getting on to the bad. So I did find a property. I said in September, October time, I'm going to look at March and see if there's anything I like. So I did find a property that I did like. Now, the big issue that I have, first of all, is the interest rates. So when I was talking about buying a property in September, October time, I thought interest rates would be lower than where they are right now. I thought they'd be around about 4%. What I'm kind of getting offered on a mortgage point of view. Now, I did think about buying it outright, but then I thought I don't want to burn all my cash in case the stock market has a dip, which we've kind of seen in the last 2 or 3 weeks. I don't want to spend all my cash in case we do have a dip and then I can't go buy more stocks. Actually, I want to have a cash pile. So then I thought about getting a buy-to-let mortgage. But the buy-to-let mortgages are coming in at 4.95% interest rates. And I thought it would be a 4% by now. Because back then, in September, October time, we just came off a 1.8% inflation reading. And I thought, okay, inflation is done now. We'll be okay. What I didn't expect to happen is that we would have a Labour government that, okay, I did think it would be a little bit of a car crash. I didn't think it could get any worse than what we've just had in for the last few years. But we did. The new government's been it's been a 10-car pile-up. It's been awful. And what has happened is I thought they would handle the energy situation a lot better. It's been even worse than what we've had with the Tories in the last few years. And I thought they wouldn't cause mega inflation, which they have done. So they've gone to all these businesses and they've put up, all the national insurance contributions, they put big increases on minimum wages. And all these businesses right now are having to put all the prices up to cover the big increase in taxes. And because of that, they're putting all the prices up and inflation is going back up again and will continue to go up. So when I thought interest rates cuts were going to happen, they certainly haven't happened and they don't look like happening anytime soon. And those monthly payments being that little bit higher, it can kill a lot of your profit. The next thing is stamp duty. I didn't expect stamp duty to go up. That did happen. It went up from 3% to 5%. Obviously, something that you don't want to see happen, that little bit more extra of your profit or your initial payment going up a little bit more after already, those interest rates being a little bit higher than what you expected. And then your tax, compared to property to stocks is a lot more tax efficient. You look at stocks, you get 20,000 a year in ISAs of tax-free allowance. And as well as that, your capital gains rate is a lot lower on your investments. I can't remember what it is now. Is it 24% right now after the update? But with your property investments, a few people, you see all these all the time, these influencers on TikTok saying like, oh, just put it as a limited company, and you only have to pay 25% now. And they never say like, but then as well, you have to get your income to you and you have to pay it through whatever it is of dividends, and then you get taxed again. There's a lot more tax on the property side of it compared to stocks. Now, I think that's totally wrong. I think when you look at the tax system in the UK, for me, is an absolute mess. Like, I can't believe we jumped from 20% to 45%, but I'd have to pay 45% tax on it. And as well as that, the tax thresholds have hardly gone up in the last 10 years, which is an absolute mess. That's a topic for another day. But the tax is just absolutely bonkers. So you've already had to take this risk on with like interest rates, stamp duty going up. The tax is absolutely bonkers. That can eat into like half your profit alone. And then your return. I'm just looking here and thinking there's all these the return's getting more limited. That's not including like if you get like I've been lucky. I'm really had a bad tenant. It takes one bad tenant, one thing to go wrong with the property. And it can look a little bit messy when you've got to pay a big amount of money up front. Where with the stock side of it, you might make 7-8% on this property investment. But I'm looking and thinking, with the money that I have there, would I back myself to make more money from the stock market? And the answer is yes. And the thing as well is some of the opportunities that are in the stock market right now, I can go buy Card Factory with a 7% dividend yield, and I just have to sit there. And that's not including share price appreciation. I have to look at like Money Supermarket, 7% dividend yield. B&M, Card Factory, B&M, that's like a 7% dividend yield. So I'm already getting the yield that I would from this property investment, but yet I still think I'll get more share price appreciation from it. Now, the stock market's a little bit more volatile. We don't know when stocks are going to go up. The stock market might not be as good as what it has been for the last few years, where I've made a lot more money. It might be a bit more of a bear market. But I'd probably back myself to make a lot more money in the stock market than that sort of return. And then I'm thinking, well, just a risk to reward point of view, why go buy it now when I think it might be better putting it back into stocks? That's the big issue that I have. So right now it's a no-go because I just think the risk to reward is just so limited. Now, there is a chance that it could change, and I might update you guys in 6 months' time about where I'm kind of at, maybe August, September time. I could still buy it. The way that I would probably buy it is that, first of all, interest rates do come down. I don't think they are, because I think inflation is going to go quite high at the moment. So I can't see, I don't think the Bank of England are going to be willing to cut when inflation's going up. So I don't think that's going to happen. But if interest rates go lower, that could be the key driver. Stamp duty change, I don't think that's going to change unless we get an emergency budget. Taxes change, which I don't think are going to change unless we get an emergency budget. Or the return gets bigger. The way the return will probably get bigger is that either the stock market goes absolutely bonkers and I've got a lot of cash on the sideline and I'm looking at the stock market and I think I've got a lot of cash. I'm not seeing much opportunity out there. If the stock market does what the stock market's done in the last 2 years, where we made absolutely bonkers money from it, and that happens again, then I'll probably have a cash balance where I'll be like, it's burning a little bit of a hole, so I'm going to go do it. So if the stock market goes bonkers, that'd be probably a way that I do go buy the property. The other thing is if the return just gets bigger, and the way the return's going to get bigger is if the property price gets dropped, which it's been on the market for 4 or 5 months. It's already dropped twice in that time frame. So there's a chance that maybe the price of the property does get dropped again. And then maybe if the drop is big enough, which if it's like the last two, then maybe it could be. Then actually I look at the price and think, actually, you know what? It's actually probably worth going for right now. But I don't know if that's going to happen. That could be the other way. So there's a few things that might change, but I'll have to come back to you guys in 4 or 5 months' time and then tell you if that has changed. But right now, for me, the risk to reward on this is just not there at the moment. So yeah, that's kind of where we're at. So apologies because it's not really normally I do these videos for you guys and their education video. I'm trying to give you some financial information here. Whereas this is more just a personal kind of update. But some of you guys asked for it, and hopefully there's some information there that's useful. And I hope you enjoyed normally we focus on stocks, but a little bit different today. So if it's there in the comment section and the video does well and a lot of you guys appreciate this sort of content, and I will continue doing it. If there's not that much views or that much interaction on it, then we'll stick to the stock market content. But some of you guys did ask for this kind of like update, so hopefully it's useful for you. And tomorrow I should get onto the UK stocks I'm buying video for you guys. So keep an eye out for that one. Thanks for watching, guys. See you in a bit.